Hi, thanks for tuning in. I was asked quite a while ago to do some videos on consolidation. It's taken me a little while to put something together. However, I have done so, and it might take a little while to get through. So we'll do a part 1 here, and I'll probably do a part 2 to finish it off afterwards. Now I'll read through as we go, and we'll look at the charts that accompany it. Consolidation. Across the markets, consolidation generally takes place as an attempt to establish, strengthen, or confirm a solid base of price support. It is most commonly seen as a place for the market to rest, recover, and attempt to absorb any supply that is drawn out in response to a sharp or sustained rise in price. Consolidation is seen following a serious decline in price where the market attempts to recover and establish a new level of support. I've got a gold futures chart here. It's a weekly chart. I didn't name most of the charts, but I did name this one because it's a weekly chart. You can see price was pushing higher quite strongly, and you can see there is a test bar, a high volume test bar, which is sort of like an absorption bar, and then in response the next bar did test for supply and the volume was much lower, and that allowed price to push higher. But then here volume started to get really quite high and price pushed sideways into a consolidation zone in an attempt to absorb the supply that was being drawn out. You can see this is very high volume on this bar. However, considering how high the volume is, the pullback isn't particularly strong, and the next bar is up on relatively low volume, although still above average. The next bar tells the story here. Very, very high volume, but it really didn't hardly break the lows that were previously set, and the next bar was up again. If this market was seriously weak and this was all selling pressure and there was no buying pressure in the market, this bar in particular should have really stretched lower, but it didn't. And in fact, the next bar was up. So this was a period of consolidation taking place. And you can see following that, the sellers had done their thing and supply began to really drop off. And then you'll see the volumes increase again as price really pushes out and up and moved from $800 an ounce up to $1,000 an ounce. A period of consolidation often takes place in an attempt to solidify and retain recent gains, or to help stabilise the market following recent losses. A period of consolidation is not always successful and may fail. And here we see a market which was trending higher. It moved into a period of consolidation, but volumes continued to be drawn out and price broke down. There you can see it better now. And this is an interesting little point. Price has broken down here. This is a no demand bar, and there's the volume. The buyers were completely exhausted. They couldn't muster anything. That's all they could do, the tiniest little up bar. Then there was an up thrusty bar in response on very low volume, and price broke down again. And here's another little period of consolidation sideways, but that failed pretty quickly as well. Price began to trend lower over these next few days, and then there was a more serious attempt to consolidate sideways here, firstly in this little zone, and then a little pullback to the lows of the range, and price continued to try to hold on sideways, but the market broke down again and began trending lower once again. So that was an attempted consolidation which actually failed. A period of consolidation can also offer an insight into the underlying positive or negative sentiment within a market and help to reset the volume profile back to normal levels in a trending market. In broad terms, any large liquid market or any regularly traded market, and especially markets where there are active professional traders regularly involved, the overall trading will either take one of two very general basic forms. It will either be trending higher or trading sideways in a range. You can see this market is trending higher, moves into a little period of consolidation, trends higher again, period of consolidation, another push higher. And this market is obviously trading sideways within a range. It was trending lower, and then after it breaks out, it begins trending higher. Consolidation in a market which has moved sharply higher or is trending higher. Following a large gain in price, and especially when the gain has taken place over a relatively short period of time, momentum may begin to ease, and the market may need to rest and recover. Increased supply, which is selling pressure, may also be drawn out in response to the rise in price, which will need to be absorbed or bought to solidify the gains and establish a new level of support. Any increased supply in the market will make it more difficult for price to continue higher in the near term. And here's an example of price accelerating higher and then trending higher for a while, but finding its momentum was beginning to be lost and some supply was drawn out. So price pulls back and consolidates sideways in a range for a while. Once supply becomes very low in the range, that selling pressure is low, the market is able to accelerate higher again with renewed vigour and then trend higher for a period as well. In this case, price then moves sideways in response. In a market, price movement will almost always take the path of least resistance. If demand, or buying support, is stronger than supply, selling pressure, price will find it easier to move higher. And if supply is stronger than demand, price will find it easier to move lower. At a certain point in time, a strong push higher or an ongoing uptrend may begin to stall because the momentum begins to fade. The market may need some time to rest, recover, and rebuild strength. At this time, the market may also attempt to absorb any supply that is being drawn out in response, which will help the market solidify and retain the recent gains. When price pushes higher and increased supply is drawn out, this supply may restrict easy price movement higher. In response to the increased supply, the path of least resistance may temporarily change from above to below, which in turn can encourage price to move lower where it can test for supply or begin to consolidate. Often this will just be a single bar testing for supply initially, which can be used to challenge any sellers and absorb the supply that is drawn out. However, if supply is found to be ongoing and sustained, a more substantial response may be necessary. In this case, the market may attempt to solidify and retain the recent gains by beginning a period of consolidation. This will appear most commonly as a small, narrow spread, sideways trading range, which contains a series of tests for supply bars. The period of consolidation can occur both organically or naturally, or it can be engineered deliberately in a market. And here's a little example of a small, narrow spread consolidation. You can see price accelerated higher. Now this is a little micro cap. I remember this one. So this was like 2 cents here. This was like 4 cents, 100% gain. Price accelerated higher over 5 bars and then moved into consolidation zone for a period of time before pushing out of the zone. When you look down here, supply became very, very low. Selling pressure was almost non-existent. It tested the breakout for strength and then accelerated away again. During a period of consolidation, the market moves lower in an effort to challenge the sellers. The fall in price may encourage the sellers to complete their orders because sellers may feel increased pressure as they could miss out on higher prices that have been on offer. At the same time as price pulls back into a narrow trading range, there is an attempt to absorb or buy any supply which is being drawn out. This period where price pulls back is a form of consolidation. It is the market attempting to establish a new base from which to launch or resume a further push higher. A successful period of consolidation can help to reduce and remove supply or selling pressure from the market. This may also help to reopen a path of least resistance towards the upside and may allow an opportunity for price to begin moving higher again with relative ease. A period of consolidation is considered successful and complete when price moves sustainably back above the highs of the initial recent rise in price, including the period of consolidation. Prior to that, the period of consolidation is considered as incomplete or as an attempt to consolidate, as there are times when a period of consolidation can fail. Sometimes ongoing and sustained supply is drawn out of a market. It may extend the period of consolidation, making it more difficult to complete. At these times, the market may pull back even more deeply in an attempt to challenge the sellers further or shake out the market, which is effectively a violent and aggressive deeper test for supply. The deeper pullback is more often associated with an organic or natural response, whereas a shakeout is more often an engineered or deliberate professional response. And now we can see a market here which had been steadily moving higher. If you look just quickly on this one, which I really didn't highlight, but this is a period of consolidation just here as price had accelerated higher and then moved sideways to consolidate and absorb any supply that had been drawn out from the sharp increase in price. And price continued to push higher. You can see that the thrust is narrowing here, and price eventually broke down below the lows of the final up bar and moved into a zone of consolidation. And look down here, some supply began to be drawn out during that period of consolidation, and in response the market pushed lower and more deeply to begin a more threatening period against those sellers. And the market did actually shake out here, but over 2 bars, so a little multiple bar shakeout before price then pushed out, tested for supply, and then moved higher again in response. A failed period of consolidation where the market is unable to comfortably absorb the amount of supply that is being drawn out and price is eventually forced to break down or close back below the lows of the recent rise in price should be considered a sign of weakness in itself, similar to a serious supply bar, and should be treated as such until the market proves otherwise. A relatively large and recent rise in price followed by a brief and shallow period of consolidation may form what classical and traditional technical analysis identifies as an unconfirmed bull flag. Confirmation of a bull flag comes when price resumes the push higher and moves clearly and sustainably above the period of consolidation. And you can see here a bull flag of sorts. Price has accelerated higher. This is the flagpole. And then it's moved into consolidation. And there's the consolidation period before price began pushing higher again. In this case, price came back and tested the breakout before accelerating higher. Okay, I think I'll leave that there now and begin part 2 down here. We'll look at consolidation in a market where price has fallen sharply or is trending lower. So we'll leave it there and we'll start part 2 shortly. Thank you. See ya.